Good evening, everyone. Welcome to tonight's market debrief. Today's date 28 July 2021, and what we have here on the screen is the S&P 500 index. As I've mentioned last Wednesday on over here, where we have a market recovery on Tuesday night, and for the past week, what we have is the US rallying back up to make a new high. Okay, so it just have a so-called a small little pullback or profit taking that happened last night, and what I will see is it might probably have a few days of pullback, and then it will carry on back on its uptrend movement. Okay, so at this moment, as I've mentioned in many past videos, the US market is on a very strong uptrend, following this 20-day, 50-day, and the 200-day parallel movement. So in this parallel movement, it is a very strong uptrend, and what will happen is it requires a strong catalyst to really force, so-called a strong catalyst to force the stock market down, into a correction or in a deep pullback. All right, so we have to wait, and at this moment, at the current high valuation, I would say is a bit crazy to buy more into US stocks. Okay, so the best is to wait for a big deep correction like back in the COVID-19 era. Okay, so we would like to have this type of deep correction, to look for good buys. So on to looking at the Federal Reserve. Okay, what we have seen or have shown you guys that over back in June they have talked about tapering their QE. Okay, so I'm just curious to look at whether did they really taper, and the truth is they have not tapered. In fact, the rate of purchase had increased over the past 2 weeks. So you can see here this huge rise, into all-time high, for them to buy new assets from the open market. So that's why their balance sheet has been increasing. Okay, so are they really tapering? I'm not too sure. Okay, from the looks of it, they have not started to taper yet. Now on to the our Asia market. This is our Asia market Hang Seng Index. Okay, Hang Seng Index, if they has broken below this support region, and it has a very fast 3 day down movement. Three big days. 1, 2, and 3. And today we have a slight reprise. Having a small little rebound. More on like so-called people scooping on the low side, because the downside I would say is mainly government pushing and a lot of fear in the market. Okay, so this is the Shanghai index. Okay, so basically they are all following the China news. Okay, news on Beijing's crackdown on the internet industries, the big tech firms. Okay, so it's more on, I would say, the so-called data, the how do they secure customers' data, how do they prevent and so-called anti-monopolistic movements, like non-affiliates, like cracking down on non-affiliates, those companies that are not with them, and then they prevent them from advertising with them or selling on their website or platform or as such. The China government is basically trying to stem that out, trying to make the whole marketplace much fairer, allowing smaller players to come into the fray. Okay, so I would say it is not really disturbing the actual business. It is just that there are more things, more compliance that needed to be done. So I would say in terms of bottom line revenue, I would say it will not be affected. Okay, so the real truth about it, because China crackdown on Alibaba had already started like months ago, and Alibaba is going to come out their results in a few days time. So from that we can start to really see whether their revenue really being affected by this China government crackdown. Our Straits Time Index is still trading sideways. Okay, we are not following China down, and we are also not following the US upwards. And I would say it's more due to our own COVID-19 situation. Okay, so as I've mentioned last week, okay, is very sensitive to this COVID-19 cases. Okay, after this spike up in cases, right, what we have is like stocks like the PPE manufacturer, MedTech, Riverstone, Top Glove, and like Sheng Siong. They all just spike up. Okay, so but as the cases starts to come down, all these stocks also start to come down together with this COVID-19 cases. Okay, so if we have like a crystal ball to see when the COVID cases going to spike up or come down, then you are able to easily play. If not, it's difficult to just make a bet on whether uh, such PPE companies, your Riverstone, MacTech, Top Glove, or Sheng Siong is going to go up or benefit from all these COVID-19 spike cases. Okay, so um, that's the situation for Singapore at the moment. Okay, is going on a seesaw manner. Like your SIA says previously, when this case spikes up, all those shares all come down. So as the cases come down, they also start to move back up. All right, so it's all running in reverse, and we just have to be patient, okay, to look at really the long-term business outcome. Okay, one thing I would like to highlight is the USD Chinese yuan. Okay, so looking at this, they have this base being formed, and past 2 days it had a break above the 200-day moving average. So if you look at this, it has been on a long-term downtrend. Okay, due to all the monetary easing from the US, and now I would say China government is returning the favor to the US. Okay, they try not to be seen as a so-called currency manipulator, and therefore I would say part of the reason China do the crackdown, they clean up their own local big tech companies, and at the same time allow the US dollar to go get back stronger. Okay, so how US dollar is getting stronger is because major companies like ARK Invest, KT Wood and all that, they are selling all the China stocks. Okay, so they are basically selling all their Chinese yuan and converting them back to US dollar. So therefore, there is a strength in US dollar going up in a short-term period while the Chinese government do on a crackdown. Okay, so those who have this type of pairing or currency pair, you do take note in your position. This is DBS. Okay, as you can see, is similar to our STI index. It's still trading sideways. It's resting. Not too sure whether it's going to go up or down. Okay, so we just have to be patient and wait. But at this moment, I would say is slightly overpriced. Okay, and it would not be worth to be buying at this price. Okay, DBS, I would say as long as below 20 is definitely a good buy. Same for OCBC Bank. Okay, like below $9 is definitely a good buy, and I've been encouraging a lot of people to accumulate, in the 850, 880 area. And during this time at $12, I mean, we just need to hold on to it. Okay, what I've seen is that recently there's some news that the so-called SG government MAS is lifting the cap on lift dividend caps on banks. Okay, I think this is just like 1 hour ago. I just saw some news in my chat. Okay, so MAS lift dividend caps on Singapore banks and finance companies, meaning to say they need not pay. They need not be limited by this 60% on their distribution for their dividends. Okay, so but anyway, I believe most of them are not paying that much. Usually banks are only paying like 30 to 50%. Okay, so I don't think there's much effect on that. Okay, Mapletree Industrial, I would say is still a good buy here during a rights issue. Okay, 260 something, 280 plus. I've also been advising you guys to buy to come in, and because of its earnings, and today its earnings came out. It's been quite a good earnings, with revenue increase, data center already starting to contribute to the earnings, and the dividend also has also increased, and therefore there is a huge surge in the price, from 290 to 294. You can see it's a much bigger range today due to this earnings. So dividend is coming out in on the somehow 4th. Okay, it's going to XD on the 4th, 3rd or 4th of August, and so you can just keep, hopefully from here you will start a new uptrend, and hopefully will break a new high from this 330 area. Sanders Reed, I've mentioned about this last week, being here about 303, 302 area that's trading above the 200-day moving average, and now it is trading in the 307, 308 area. Okay, so what we would like to see is the earnings, which is going to come out in a few days time, and see if it's positive, and hopefully it can help it break through this trend line of about 313, 315 area. Okay, as Singapore is in a so-called big sideways consolidation, and I would say most of the stocks are all at a high price. There isn't much to look at, except for this particular stock, EEM. Okay, as I've mentioned, they are having this so-called global crunch in semiconductor chips, and AEM is one of those provider, and also the so-called tester, and they did more. They have one big customer in Intel. All right, so if you have been following like YouTube channels on all that, right, they are talking about Intel, the death of Intel, but I would say that was probably like 5 to 10 years down the road. Okay, so at this moment what we are seeing is that a lot of people are there's a big demand for microchips and semiconductor processors and all that, so therefore this AEM has started to rally back up, testing the previous high here I've mentioned last week, 420, 422 area. So it has pulled back, the whole of past 1 week, and I would say this is a healthy pullback. Okay, and it's testing like the 200-day moving average or 52-day moving average. So if it started to move back up, I would say it would be an opportunity to buy into this, hopefully to look at it break above this 422 area, and reaching up to the high here of 460. So this is mainly more on the short to mid-term basis kind of trade. Okay, now on to the so-called big news. Okay, the so-called China crackdown on big tech firms. So I would say Alibaba will be at the forefront. Okay, I've talked about Alibaba many times, or quite a few times in the past videos. And what we have here, let's look at the updated chart, on where Alibaba stands now. This Baba is basically listed in US. Okay, so if you look at 9988 is the counter that is listed in Hong Kong. Okay, so I'll be using the Baba because it has a much bigger history, longer history, listed for much longer time. Okay, so what we can see here right now at the 170 area is the so-called COVID-19 low. Alright, and after this COVID-19 low, it has rallied quite a bit, no more like 100% up to 310, their so-called all-time high. So what happens from this all-time high? It has basically dropped about 43% right now to a low here of 180. Okay, and it started to have some rebound last night, and the volume for the past 2 days have been tremendous. There are a lot of people selling, there are also a lot of people buying the shares. Okay, so do note that there's always an equal number of buyers and sellers, because it has to match before a transaction can be done. So what happens is that there are more willing sellers to sell at lower prices, and therefore the price drop. Alright, so but at the 180 area, I think we are starting to see buyers coming in. Okay, and therefore we are seeing a green bar here, buyers buying in. So why would I say that Alibaba should be a good buy? Right, the reason, okay, this is the so-called data that I've mapped out for Alibaba. Alright, so you can see here that its revenue per share have been increasing. It has not decreased at any moment. It's been increasing at a rate of like 50% and above. Okay, so 40%, 30%. Its revenue per share has been increasing at a tremendous amount. Okay, so even its book value, right, is also been increasing like 30% a year, and its return on equity is like 15% a year, and its free cash flow is growing humongous. from this data I would like to show is that previously is having a P ratio of about 24. Okay, so if we look at this 54.68, right, earnings per share, which is in Chinese yuan, and we convert it into US dollar, it is about $8.40 US dollar earnings per share. Okay, so if we were to take its current price, roughly about 180, divide by this $8.40, right, it is roughly about 21, 22 PE ratio, price earning ratio. Okay, so what is this P ratio? P ratio is basically the uh, market demand for the particular kind of shares. Okay, and if we look at its so-called direct competitor or a similar business, which is Amazon, because they are very similar online. They have do video, they have finance, they have their cloud computing, and by the way, Amazon cloud computing is already quite mature, and therefore they are making tremendous amount of money. Whereas Alibaba is on the start, they just started their cloud computing about a few years ago, and is now starting on an exponential run. So I'm not too sure, we can only know for sure once the result is out in a few days time. Now if we look at Amazon, okay, their PE ratio is currently running a PE ratio of about 70. Okay, all right, 70, and Alibaba is only running at a P ratio of 22. Okay, if they were to be matched together, so let's say Alibaba were so-called the China situation has cleared up, and Alibaba is starting to be back in favor. Okay, meaning to say they can chase Amazon, which means to say Alibaba. Let's say if Alibaba's market demand, the P ratio demand for it at 70, you take $8.40, multiply by 70, that translate to a market price of 588. Okay, so with a 588 price tag, you divide by a current price of 180, that is 3 times the current price now. Okay, so by having this simple calculation, right, I would say Alibaba will be a buy, because China does not really is affecting their revenue. Okay, firstly, and the second question that I've thought about is that China do not really want to penalize their own companies. Okay, there's no reason for them to really penalize their own companies, because these companies, the businessmen, they are all very shrewd, and they can easily relocate their companies elsewhere, and China will not receive any tax revenue from them. Okay, so it's not very wise for China to really crack down on that, and it's going to affect their own economy per se. Okay, so what right now they are only so-called affecting is basically the market cap, market price, which does not affect businesses at all. Okay, so I would say for Alibaba, I think it is a good buy at this moment, because there is a sudden down spike or big move downwards. Okay, so in a short term basis, I would say there might be some rebound, and it might continue to trend downwards. Okay, as there's some news here, you talk about China's plan to have so-called, it will be a 6-month campaign, to address all this problem. Okay, so it might be a 6-month, it might just ding dong sideways, to form a base over here, or it might trend down for the next 6 months. I really do not know, because nobody can predict where prices will be. Okay, we can only just give an estimate where it can be. All right, so I would say at this moment it's cheap, and even like look at Charlie Munger and all these so-called big value investors, they are all starting to buy Alibaba shares. And besides that, there are some of the big so-called big cap stocks, big tech, that are also being pulled down, or so-called rammed down, is like Tencent. Okay, I draw this line quite some time back, or somewhere over here. A friend of mine just asked me, where do I think Tencent will be if this China crackdown starts to happen. So I mentioned to them, it's roughly about 430 area. Okay, so you can see here it basically reached a low of about 425, and it started to have some buying happening right at the bottom here. Okay, you can see the tail here, and this range bar, I drew that is to show where the 50% mark is, which is about 386. Okay, and at this moment is right now down 45% from its all-time high. It's roughly reached the first point that I think that it will go to, which is about 430. Okay, and there's some buying starting to happen, so we should be also looking at some short-term rebound happening. It might be one day, might be 2 days, or might be a week. So I've mentioned my take about the so-called Chinese government crackdown on these big tech companies, and I would say, well, we can just slowly buy and accumulate, as it goes down and average down. Okay, so once it starts to turn back up, we will be um, making a much bigger profit from it. Okay, so just take a look what happened like in the OCBC time during the COVID times. When there is a huge sell down, okay, it has this very big so-called rebound that happens. Okay, that usually is quite fast. Okay, in the first movement, and it usually takes like 6 months to a year for them to form a base before it starts to turn up. Alright, so what we want to find is that hopefully you can buy some really at the low price, and then we can like average at lower prices or fairly low price. Okay, and then have a big enough stake, so that when it starts to turn up, when it starts to be back in favor, we'll be making a ton of money from it. Okay, so some other stocks that are in this space is JD.com, which is also another direct competitor to Alibaba. This JD.com has been also down like 40%. Today, there is a tremendous volume coming in, soaking up all the sellers that are fearful, and that's why we are having a green bar upwards, closing higher. Okay, so we are starting to see buyers coming in. So I would say there will be short-term rebound happening. And another one will be your so-called online delivery, and tech company, and it's the same thing today, having a much so-called green bar. A lot of buyers are coming in to buy. So these are the main four big tech companies in China. Okay, so do watch out for them over the next few days.